While genomics, the study of all of the human body's genes, has been around for many decades, in recent years, the process of sequencing has grown rapidly with the development of new technologies that continually set new standards for the amount of sequencing that can be done. All this means is that there are potentially huge dollars to be had amongst genomic companies, and in light of the global pandemic and vaccine developments, these genomic companies have been center of attention this past year. In today's episode, I discuss one of the most popular genomic stocks, CRISPR, and provide my insight on investing in CRISPR and an alternative strategy I think you should consider when approaching this stock for the long term. Hello, you wonderful people out there. My name is Chris, and welcome to the Business Report Show, where I give my insights on the world of business and investing. Now, before we dive deep into the topic, please hit the subscribe button. And if you do end up enjoying this video, please give it a like, as every little bit helps. Couple things before I get started though. I am not a financial advisor or financial expert. Always seek professional advice before you invest. Second, I've created the various chapters in my description for those who want to fast forward through the topics that I'll cover for this video. Now, in order to understand and appreciate the strategy around investing in genomics, we need to understand the significance of genomics and how it is being used today and where it's going in the future. I won't go into the early history of discovery of DNA back in the late 19th century, but I will say that in 1977, a scientist by the name of Frederick Sanger developed a sequencing technique for DNA to sequence the first complete genome called 5X174 virus. This is what opened the doorway to the possibility in the field of genomics and everything that we see today from genomics companies. Why would scientists and society in general really want to have this ability to undertake sequencing? Well, simply put, in order to fix something, you need to understand how that something is built. Without understanding the intricate parts of a vehicle, for example, how can a mechanic diagnose and fix a problem with a car? Same with human disease and health issues. How can the medical community diagnose and fix us if they don't have a roadmap to how our bodies are built and how diseases may arise from the very thing that we are made up of? As the National Human Genome Research Institute put it, genomics is helping researchers discover why some people get sick from certain infections, environmental factors and behaviors, and while others don't. For example, there are some people who exercise their whole lives, eat a healthy diet, they have regular medical checkups, but yet they die of a heart attack at age 40. There are people who smoke, never exercise, eat unhealthy foods, and live to be like 100. Genomics may hold the key to understanding these differences. Of course, with understanding these differences comes opportunities to fix these problems. Biomedical companies such as CRISPR are pushing to find the treatment to combat diseases that plague humans. Think about this. If you can find the treatment that prevents leukemia, or can develop a successful vaccine like ones we are seeing in today's global pandemic, you essentially have a license to print money. Now you know what the revenue possibilities are for genomic companies. How much are governments spending on this COVID vaccine alone? How much would families be willing to pay to prevent potential early heart attacks? Okay, now let's take a look at one of the hottest genomic stocks in 2020 that seems to be continuing its trend for 2021. CRISPR Therapeutics, ticker symbol CRSP, hitting a low of $32.30 in March, and then hitting a 52-week high of $181.42 in mid-December, and then closing the year out slightly down at $153.11. CRISPR's claim to fame is from one of their scientific founders that co-developed a gene editing tool called the CRISPR-Cas9, which has revolutionized biomedical research by precisely cutting DNA and then letting natural DNA repair process take over. The tool is currently the simplest, most versatile, and precise method of genetic manipulation, which is why CRISPR Therapeutics has been taking the industry by storm. Now, early in December of 2020, CRISPR saw successful long-term results from a study with the company's lead candidate, CTX001, for hemoglobin-related disorders. Hemoglobin-related disorders such as sickle cell diseases currently require lifetime treatment that can result in the need for regular transfusions, painful symptoms, and chronic hospitalizations, resulting in reduced life expectancy. The current success of the trials has pushed the stock price up in December as it hit its 52-week high, but has since dropped approximately 15% to close out the year. Now, one can speculate that shorter-term investors were cashing out and taking a little bit of profit prior to the end of the year. Things that will provide continued upward trend for CRISPR will be further results from their CTX110, a treatment that helped 2 out of 4 advanced stage lymphoma patients achieve complete remission. Think about that, complete remission in advanced stage lymphoma patients. Plus, we'll see proof of concept trial results from multiple myeloma patients treated with CTX120 and patients with solid tumors treated with CTX130. All very exciting treatments that, if proven successful, will be life-changing for many that suffer from current incurable diseases. On top of all this potential good news, some of the largest ETFs and fund managers have all indicated recently that they will be increasing their holdings of genomic companies to their portfolios. Now, while this is great news, there are some concerns. I won't really dive deep into earnings valuations because I do hold a few stocks such as Tesla that continue to rise despite what some analysts see as outrageous valuations. But what I will say is that CRISPR does not have any approved products for sale yet, so in theory, many of their projected therapies are still speculative. Because of the speculative nature of this, it also attracts a large number of speculative investors. Any negative news in 2021 that gives investors the sense that the therapies may take longer for approval or the results are not near 100% effective will definitely impact the share negatively. Now, I'm not saying don't invest in CRISPR or get rid of your current holdings. I think CRISPR is a good investment with a lot of upside if all things go well during the trials. What I would like to recommend is looking at shifting part of the CRISPR investment into one stock that will benefit from anything positive that comes out of the current trials from CRISPR, but will also minimize some of the downside risks that come in case things don't go well for CRISPR. So the one stock I like in terms of balancing your CRISPR investment is Vertex Pharmaceuticals, ticker symbol VRTX. In October of 2015, CRISPR and Vertex entered a strategic investment to develop treatments from the CRISPR-Cas9 genome tool. At that time, Vertex and CRISPR announced it would focus their initial gene editing research on discovering treatments to address the mutations in genes known to cause and contribute to cystic fibrosis and sickle cell disease. Vertex and CRISPR also announced it would evaluate a specific number of other genetic targets as part of the collaboration. Vertex will have exclusive rights to license up to 6 new CRISPR-Cas9 based treatments that emerge from this collaboration. As part of the collaboration as well, Vertex made an upfront commitment of $105 million to CRISPR, including $75 million in cash and a $30 million equity investment. Just like most of the genomic stocks in 2020 after a bit of a dip in March, Vertex started to rise on positive revenue news and announcement of new treatments having trial success. You will note though in the graphic, Vertex took a hit mid-October after the company discontinued a phase 2 study for an alpha-1 antitrypsin deficiency AATD therapy. However, I feel this was more of a reactionary sell-off from those speculative investors I talked about prior, who may not have the patience with pharmaceutical processes. As Vertex did confirm on the earnings call in October, part of the company's strategy is to advance several molecules into early clinical studies, then only move forward with the strongest. In this case, Vertex is continuing phase 2 study, but with another AATD therapy. We will need to wait and see in Q1 of 2021 for results from this continued second phase. What I like about Vertex is that they are a revenue-generating company that has shown 5 years of annual revenue growth. In the most recent quarter, Vertex announced $1.54 billion in revenue, a 62% year-over-year increase. Their flagship treatment of cystic fibrosis, Trikafta, which was approved by the FDA last year, is already getting marketing authorization approval with the European Medicines Agency, which means that various medical services within the EU itself will have approval to discuss early access to the therapy in their country. As of December, Trikafta has been accepted by Health Canada for priority review as well. Vertex continues to be the leader in cystic fibrosis research, and these approvals globally only bodes well for its bottom line. Now, just like CRISPR, any negative news, much like we saw in October, typically hits the pharmaceuticals hard. So if their phase 2 AATD therapy turns out with disappointing results in Q1 of 2021, expect a potential 10 to 15 drop in stock price. All this being said, the fact that Vertex has incoming revenues from approved products makes this a good long-term stock to consider for your pharma portion of your portfolio. Now combine this with the recent drop in share price, it seems like it might be a good time to consider Vertex, especially if you're looking at the genomic space or currently hold CRISPR but want to increase your exposure to the market. When Trikafta was approved last year by FDA, CEO Jeffrey Leiden said that the approval was the outcome of a 20-year journey that started with a dream. In my opinion, CRISPR is much closer than Mr. Leiden's 20-year time frame if you factor in the fact fact that Vertex made their investment in CRISPR 5 years ago, and as of December, CTX001 phase 1 and 2 trials are still ongoing, I would expect commercialization plans are still quite a few years out. I will admit, however, that the upside potential of CRISPR is probably higher than Vertex, and CRISPR's genome tool is versatile enough to look at other therapies outside of their current trials that Vertex is not privy to from a partnership standpoint. Either way, I see positives for both CRISPR and Vertex, and maybe having a hybrid of the two would be a great strategy for you. My personal conclusion is that Vertex offers you exposure into the CRISPR-Cas9 programs while giving you a revenue-generating stock to invest in while they wait for the upside of CRISPR-Cas9. Well, that's it. As mentioned before, I'm not a financial planner or investment advisor, so make sure you consult with a professional before investing. Don't forget to hit the subscribe button, and if you enjoyed the video, please hit the like button as well. Every little bit helps. I'm pretty sure you're wondering why I'm not talking about the big elephant in the room with BNGO and the penny stock market that it falls under. It has seen over a 300% increase, and if you don't know much about BNGO, definitely go check it out. Read up about them. I know it's been hyped up a bit on YouTube. I'm more of a long-term, mid to long-term investor. I used to dabble in the penny stock markets many years ago when I had a little bit more appetite for risk, but now I'm trying to take less risk and secure my portfolio more for my retirement. So all this to say, there are definitely some great stocks out there that you can look at, some immediate upside in the genomic space, and there's no shortage of commentary on those stocks here on YouTube. Again, that's it for me. Thank you for watching the Business Report Show. I'll catch you next time.